Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Let me get this out of my ear. This music still playing in my ear. That's much better. We can't miss the tidbits. I appreciate that, Tyreek. Shout out to everybody that's in here, man. Oh, first of all, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, yeah, I'm not the amazing spider dad. Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Big spider. Yeah, hear me. Hey, man. You're in tune to another episode of the Price Action Recap, the intraday Price Action Recap being brought to you by the Smart Money Manuscript. Well, Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your one-stop shop for all things trading and investing related. For $69.99, you have 19 videos and 19 quizzes to test your knowledge on those videos, covering everything from the basics, from like just basic banking, all the way through the advanced ICT concepts, how to put it all together, right? How to figure out how much you need for your personal retirement portfolio. Everything is in there for $69.99. And on top of all of that, you get the Smart Money Mentorship, where you meet with moi every second Saturday at 12 p.m. Eastern Standard Time to get your hard-hitting questions answered. About to make me throw up. It's just so sickening how good it is. Now, who we got up in here? What's going on, Marco? Marco Pico Train. What's up, Marco? Got here to learn and share over there. Somebody said the quizzes will really test your skills. SMM is fire. Thank you, Spambot. Spambot said Spambot said the quizzes will really test your knowledge. What's up, Mike Pence Fly? We got Mike Pence Fly slid up in the building, hanging out with Empire Trades. We got here to learn and share. We got J Trades Y. I bet that ain't nobody but Jada with another name. I bet you that's Jada with another name. We got Lump up in here. What's going on, Lumpford? We got Tyreek up in here. We got E-Rock, I am not calling you that. We got E-Rock up in here. What's going on? We got Seawalk up in here. Let me see here. Hey, wait a minute now. Hey, that's all. I see more numbers than I see names, but them the only names that I see. So that's all I'm gonna say. Let's go ahead and get into it, man. Did Price do anything today that caught you off guard? Right? Did Price do anything today that caught you off guard? Right? If you are in, if you one of the diamond members, right? If you one of the diamond members in the Discord, okay, based off what we discussed with our pre-market analysis, right? Can you see how the algorithm utilize the price levels, aka PD arrays and different quadrants and stuff of dealing ranges? Can you see how price utilize them like a big dog today? Can you see it? If you are a diamond member and you was on the pre-market analysis this morning and you can see how them levels was leveling today, right? Better yet, if you can't see it, just say, Tim, I don't see it. I don't see how the levels was leveling. And we will dive into the price and look at it together. Right. Matter of fact, either way, if you see it, say, yeah, I see it. I see it. It's starting to click. If you don't see it, say, Tim, I don't see it. I don't know what you talk about. Right. If I'm talking to myself, say, Tim, you talking to yourself. Came in on the tail end of the prep, so I missed what was said. Here to learn and share. The good words say, the last shall be first and the first shall be last. But in the case of this right here, if you pull up late, the last shall not be first. You feel? You gotta be on time. Just really surprised to see that much movement on Monday, running up plenty of intraday sell side and still stayed above the daily wick CE. And you see that right there, right? You see how you see that, right? That is telling. It's telling of something, right? What is it saying? It's respecting. It's still respecting a discount PD array on the daily time frame, right? Right. It's still respecting a discount PD array on a daily time frame. Now, let me put this out there. Let me put this question out there before we even look at the charts, right? Let's put this question out there. It's for anybody. True, I never know when you are going to be on. Sometimes it is earlier and sometimes it's later. Now, for the pre-market analysis, I try to get on there at 9, right? But sometimes, I get out the door a little bit later. Then sometimes it might be 9:15, sometimes it might be 9:20, but I try to get on there at 9, right? That's what I try to do. But sometimes depending on traffic, depending on if I leave late, what I'm saying, I might not be able to make it right at 9. You feel me? But let me put this out there, right? When we are when price has come down to a discount PD array on the higher time frame, and we see discount sensitivity, right? Price on the higher time frame has retraced back down to a discount PD array, and we see discount sensitivity, right? Is that a bullish or bearish signature, right? Put it in the chat. When price on the higher time frame has retraced back down to a discount PD array, and we see discount sensitivity, is that a bullish or bearish signature? Put it in the chat. I'm giving it a little bit of time because I don't know how much of a delay people are on.
Well, what was the question?
Oh my goodness. I done said that question 12 times. Empire Trades, were you paying attention? Or are you sleeping?
I was not. I was text messaging someone. Sorry.
Oh my goodness. If price comes down, if the higher time frame comes down to a discount PD array and we see discount sensitivity, is that a bullish or bearish signature?
Bullish signature.
Say what?
Bullish.
Oh, okay. Cheap cell phone family. All right. So we got bullish, but everybody saying bullish. Correct, right? Correct. Bullish, right? That's a bullish signature. Okay, so we get a bullish signature on the we're using the weekly time frame, right? The weekly time frame is our higher time frame. We've come back down to a discount PD array on the weekly. We've come down to a anticipatory reactionary point, a discount PD array on the monthly, right? And so now we're starting out a new week right after we got this bullish sensitive, this discount sensitivity on the higher time frame, right? So now, since we got this bullish signature, we're going into this next week with the anticipation of the price wanting to be bullish, right? Now, if you're anticipating price to be bullish, what do you want to see going into the new week? What's the preferred thing you want to see going into the new week? Price to just rally off the rip, or price to pull
attack
back?
the opposing liquidity, I think.
Yeah. Okay. So price go down. Very good. Price take sell side. Very good. So you want to see the beginning of that new thing. In this case, we're saying a new week. You want to see it come down, right? Because you're going into the week based off of some bullish signatures. Okay. Now, when it starts to go down, you're anticipating certain things to support price, right? So on your daily time frame, you want to see certain things be respected. On your intraday time frame, right, you're watching to see how are these certain levels being utilized, okay? Because at the end of the day, if price came down to a discount PD array, right, what type of program was priced in on its way to that discount PD array? A buy program or a sell program in the short term?
Sell program.
Sell program. Very good. So if the if price is in a sale program, right? What do we don't try to pick? Hmm? Hmm? If price
Don't
is in
pick the bottom.
exactly. So price is in a sale program, short-term sale program, coming down to that discount PDA rate, right? So if it's in a sale program, we don't try to pick the bottom, right? So now it's come down to a point where we anticipate this area to act as support, right? And when we see that discount sensitivity, we say, okay, that's a sign of it acting as support. Now that price has done this, it should do that, right? So as you go in, this week gave me discount sensitivity. So when I go into this next week, I want to see the continuation of that bullishness. And if I'm looking for the continuation of that bullishness, right, the prime or desired way for that bullishness to continue is to retrace to a short-term discount to give me an opportunity to participate. Because when it gave me the discount sensitivity, right, that was just the algorithm saying, hey, look at me. And now that they're saying, hey, I'm not in yet. And so now I'm looking for it to give me an opportunity to participate. So I want it to come back to a short-term discount so that I can participate. But on the way back to that short-term discount, there's certain levels you want to see hold, right? And why? Because if these levels don't hold, then that's going to invalidate your bullish thesis, right? So when the new week, in this case, the new thing starts, if you're bullish, you want to see it go down, go engage some level of liquidity, go to a discount PDA rate, a short-term discount PDA rate to give you an opportunity to participate in the move. Because when you see that discount sensitivity, what that means is hitting a discount PDA rate and jumping up off of it. When it jumped up off it, you didn't have an opportunity to participate yet. So you want it to come back for you. Come back and get me. Right? Okay. So let's go look at the chart. Right? Let's go look at the chart and see what is designed to act as support. Oh, before we do, this is what we're talking about. This is what we're talking about. Do y'all see these magical boxes? Right? Do y'all see these magical boxes that's on the screen right here? Right? I got these boxes off Amazon. I ordered these. It's a special tool. If you look down here, on my screen down here, it's a toolbar here. I ordered this toolbar off of Amazon. It was I went to Hogwarts.co, right? And I spoke with somebody named his name was Tony Bartholomew Potter, right? Tony
You
Bartholomew.
serious, Tim?
Yeah. I talked to somebody named Tony Bartholomew Potter, right? And I got this magical.
Hey, who asked that? Who was that? Hey, who that was?
That was Empire Trade. That was
Yo, you
Empire
sound
Trade.
What's up,
you sound
Empire
like you
Trade?
really did.
Yeah, Tim got a cheat code, man. He got a cheat code. Yeah.
Okay. Nobody say, are you serious? I've been studying all this time and I can just talk to Bartholomew Potter. All right, man. But all seriousness, right?
You
During
gotta
the
send me the link, Tim. You gotta send it
yeah,
to
I
me.
got you. I'm gonna put it in the chat, right? all seriousness, right? This right here, on the I ain't even gonna go through all of that right here, but the levels here we was looking at, the different things we're looking at. Look at how price, right, interacted with them, right? Right. We came up, we swept this liquidity right here, right? When we pushed up, swept this liquidity. This was that 7 o'clock SIBI that we pointed out. We said if price is bullish, this will be used as an inversion fair value gap, right? But Tim, how can I use that information? I don't have you sitting there with me when the tickers are ticking, right? So if we say if it's bullish, this will be used as an inversion, right? If we come up above it and sweep liquidity, and then we close back below it, it's not being used as an inversion. Now it's a reclaim, right? Now it's because we went above it, took liquidity, and immediately went back below it, right? Now it's not being used as an inversion. So what does that say? Oh, price must not be bullish right now. Is that a bad thing? No, it's not. Why? Because it's Monday at the beginning of a new week. And if price is bearish today, that kind of leads into the idea of, hey, we could possibly have a bullish week, right? We could possibly have a bullish week. But in the meantime, right? In the meantime, let's take advantage of these intraday levels, right? Where now I know this should be based off what Michael teaches. If it's bullish, this right here will be used as an inversion. What do we do when we come back down to it, right? We create a SIBI right there. And not only do we create a SIBI right there, that right there is the first presentation during the 10 o'clock open range, right? During the 10 o'clock open range. That's our first presentation during the 10 o'clock open range there. So when we come back down below it there, right, we create our first presentation during the 10 o'clock range, right? We drop down, we come down here to our first presentation during the 9 o'clock range, right? Bounce off of it, come back up here one more time. But what don't we take? Pay attention, right? These are the smaller details that you want to pay attention to when price is choppity chop chop choppity chop 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 choppity chop chop chopping, right? Because remember, who saw the post that I shared when I said price is stuck in between two first presentations right now, right? Who saw the post? Did y'all see the post that I shared when I said price is stuck in between two first presentations right now? Yes, no, maybe so. I see somebody said me, right? So
No,
now,
I didn't see.
you didn't see it?
No.
Stand in the corner and stick yourself, Tony. Stick yourself, Tony. Right? Right. So we got our first presentation from the 10 o'clock opening range, and we got our first presentation from the 9:30 opening range, right? So when we come here, we drop down there, right? What do we do here? We set relative equal lows. Okay. Then we trade back up here, right? And we touch that first presentation again, along with this is our current new week opening gap, right? So this time we come back to the new week opening gap. Then we come down, right? And we take those relative equal lows, all right? When we rally back up, right, and come above this buy side here, what don't we take? We don't take that buy side that traded up into that 10 o'clock first presentation, right? Then we drop back down, and what do? We create relative equal lows again. We hang out here and we rally back up again, right? Price is bouncing in between well, first prezy, first prezy, first prezy, first prezy, right? We come back again, and notice now, no, this is stuff you got to pay attention to, right? When you're watching price, especially when price is doing this sloppy, nasty price action that don't nobody want to trade, this stuff right here teaches you so much about what the algorithm is doing, right? You see this right here when we came up here the first time to this consequent encroachment, right? This body closed right here. We're just going to eyeball it and say that's roughly around the lower quadrant, maybe a little higher than the lower quadrant, right? When we came back up here this time, we did not take that high, and look where the body closed this time, right? Inside of the new week opening gap, right? After creating these relative equal lows again, and we traded up here, didn't even get to consequent encroachment this time. And look where the highest body closed at this time, lower than the new week opening gap, lower than the fair value gap, right? So the wicks are doing the damage and the bodies are telling you the story. On top of that, we're not taking the buy side, right? Came down, set sell side, came up, didn't take the buy side. Came down, took sell side, came up, didn't take the buy side. Came down, set relative equal lows again, came up, didn't take the buy side. Came down, took out the sell side. Once we took the sell side, traded back up into the imbalance and drop it like it's hard, taking out the overall sell side.
It's a 22 model, right?
Say that again.
That's a 22 model. It creates that fair value gap. It goes
Right
up
here.
to the fair value gap. Yep.
Yeah.
And then goodbye.
Yeah, model 22. Yeah, 2022 model there. Right. 2022 model here. It took a little bit of time to play out because we took the buy side here and then we broke structure here, but it's still the model. Buy side structure with the fair value gap, trade back into it, go. Right. But that's your model 2022. Right now, if you want to go candle for candle, there is a little bit of, you know what I'm saying? There's a hot air that you traded back above here. But like me, I'm not going to be picking straws like that and say, hey, look, model 2022. I'm looking at when we actually doing the damage. We came up, took buy side here, right? Then came and broke structure there and then traded back up to that fair value gap right there, right? Because this swing high right there, right? That's just in the midst of all this right here. But yes, it is 2022 model there, right? And then, so, but it's key levels where this right here, if price is bullish, that should be used as a inversion fair value gap. Why? Right? He taught that in one of those lectures. That's the very first candle from that opening range, and it's an imbalance right there. So since it's a bearish imbalance, if price is bullish, that right there is going to be used as an inversion, right? And so watching that to see if price use it as an inversion, right? Price does not use it as inversion. Well, Tim, we got above it, we closed above it, but look at how we went above it, right? Does price look like it's excited about getting away from this level right here? No, it doesn't, right? All it did was creep his way up and take out the buy side, right? Then once it did that, then we came back down to it. And once we got here, is it defending the lower half of this right here? No, it's not, right? It's not defending the lower half. We're closing lower and lower and lower and getting all the way back down below it, right? And then once we get below it, is price defending the upper half of that right there, right? Look at it. Look at the difference between trading into this and then trading into this. Can anybody not see what I mean about defending the lower half of this or defending the upper half of this? Is there anybody who can't see that? Don't be shy. If you can't see it, say, Tim, I can't see it. See the difference? Y'all see the difference? All right. Now,
What's the difference?
okay. If price closed above this PD array here, right? So if it's going to be used as a bullish PD array, you want to see it defending the lower half. right? When price trades back down into it, right? We trade down, don't get the consequent encroachment, right? Trade up there. Okay, we trade up into this. So we watching to see if this is an immediate rebalance because we're coming down. So we trade up into that right there. So we come here, we trade below consequent encroachment there, right? We trade back up, we trade all the way down to close to the low right there. Then we come back and we trade all the way through it. Then we come back and we trade all the way through it and close below it. So we're not defending this lower half. Price is just slowly eating through the lower half, right? So now we come here and we close below this area here. We create a SIBI, right? So now we come back, right? We trade up the consequent encroachment. Then price trades all the way down here. You know what I'm saying? We come back to it. We touch the low. Price comes all the way down here. We come back to it. We hit consequent encroachment. Price comes all the way down here. We come back through it. We come roughly to the lower quadrant. Price comes all the way down here. It's defending the upper half of this, right? If you're bearish, you want to see the upper half be defended like this right here. You don't want to see price just digging all up into that upper half, right? You want to see it stopping in its tracks. You see what I'm saying? And so now here, when we coming down to this PD array right here, you want to see we're above it. So we want to see this lower half be defended. We come here, we can't even touch it. We go all the way back up there. We come here, we barely poke in, right? We go all the way back up there. We come back down, we touch the high again. We go all the way back up there. It's defending the lower half of the, and matter of fact, it's defending the whole PD array, but it's defending the lower half of this bullish PD array while we're above it, right? And then now, once we come over here and we get this breaking structure there to the downside, right? After we've been not taking those highs up there, once we get that breaking structure, right? We come here, right? At consequent encroachment, we trade back up into our imbalance, right? Look at the bodies, right? We're closing here. We couldn't even get to the high, right? We closed inside the PD array. There we opened up a wick above that high. Then we dropped down, right? Where we closing at here in reference to these up close candles right there, right? We're closing back down below them. You see what I'm saying? We're closing back down below them. All right. Now we come down here and we close outside of the lower half. We're no longer defending this lower half right here, right? If you're above a bullish PD array, you want to see the lower half be defended. If you're below a bearish PD array, you want to see that upper half being defended. Okay. Those little signatures that you can learn so much from price when it's consolidating like this right here. All right, this ain't nothing that's a great joy to trade inside of, right? Matter of fact, because when I took my trade today, right, when I shared with y'all, what did I said I did, right? Who can remember what I said I did, right, without cheating, right? When I took my trade today, right, who can remember what I said I did? Anybody? Anybody can remember what I said I did? Anybody? Can you remember?
You say you took a scalp.
Oh, you're so thorough. All right. So, scalp, right? So, what am I, right? So, I'm looking for this to act as support, right? So, when I come into this right here, right, I'm sweeping liquidity and I'm trading off of, why am I trading off this right here? Because it's the first presentation and it's all the way down here in the discount, right? And we have, remember what I said, if we come all the way back to his first presentation, that is a really deep retracement to come back to this first presentation. And we melted all the way back down here, all right? And then we traded back up to this first presentation, okay? And then I said, okay, we traded up there. We haven't taken out no buy side. So if we come back down to this first presentation, I'm going to take me a scalp off of it, right? So take the scalp, right? Tim, that's a big what's the name right there? Are you putting on that much risk? Right. So let's come here. Right. Are you putting on that much risk? No, I'm not putting on that much risk, right? For me to put it at the low of that counter right there, that's 47 points, right? That's over $200 on the that's like no, that's way more than 200. That's almost $1,000 because 50 points is $1,000. That's almost $1,000 on the NQ. I'm not taking that, right? So what am I utilizing? Looking at this right here as my area that price shouldn't go below. If we look to the left, everything on in the box to the left, look right here. Y'all see that right there? Who knows what that is right there? Right? Who knows what that is right there? What is that right there? Somebody tell me what that is. What is that right there?
It's a Bissy.
That's a Bissy, right? That Bissy right there was created at 856, right? At 856. If you look what price came down, right? Took out a low, came up here, stayed there for a second, and then displaced away, right? That is the first Bissy that was created before we came down and got this change in state delivery. So when you're below that, you're looking for that to act as an inversion fair value gap, which it did. So once we get back above that, what do I want that to act as?
Support now.
Yeah, support, but what I wanted to act as? I wanted to act as an inversion this time.
Oh, that's what's it, reclaim, right?
Reclaimed, right?
Yeah.
So if I'm entering off of this Bissy, right? And if I'm correct, right, price should use that reclaimed Bissy right there as support. So, right, when I'm looking here, I'm putting my stop below that Bissy right there at the low of that candle right there. That's where I'm putting my stop, right? Now, price is not showing a willingness to continue higher, right? Remember, we came up here and we swept liquidity and we did it in a lackluster fashion, right? But then we started coming down, right? We started to get displacement as we're coming down. Sibby, Sibby, Sibby. We're getting displacement coming down, right? So price is looking heavy at this time. But when we came here, we didn't touch this here. And when we went back up, we didn't take out any liquidity, right? So we still haven't used this imbalance yet, right? We still haven't given this an opportunity to do its job, right? So now if we come here, right, I'm not risking a whole lot. Okay. We got heavy displacement above this right here. So I don't want to see price digging back down into this right here. Why? Because we got our little V shape there, right? Coming off of a anticipatory reactionary point that sent us way up there like that, right? And I'm looking at this right here as that's what price should use as support, right? In confluence with this here. Okay. That's why I'm not looking down here at the inversion over here because we got a reclaimed over there, right? That we're just coming back down to. Okay. So we got a reclaim that we came back down to here, right? So we came down there, discount sensitivity off of that reclaim, right? And then we come over here, right? This right here was at the end of the macro, right? So this low right here was created at the end of the macro, all right? And when we drop down here, if we come into this, we're sweeping liquidity. So if we sweep liquidity here, right, what are we looking for, right? Some type of purge and revert type thing, right? Purge this, go back there, right? Because it's gonna at least come back up to that, right? So it's looking heavy. So I'm not trying to force it back up here to these highs, right? What am I looking to do? What's designed to stop me from getting up there, right? What's designed to stop me from getting up there, right? I have a BISI right here, right? We came down here and took off there. Okay, this is the first BISI that we got before taking off here, then coming back down there, right? So if price is really heavy, right? If price is really heavy, when we trade back up into this BISI right here, right, it could very well sell off. So I'm just taking a base hit. I'm looking for price, and this is a balanced price range right there. So I'm just looking for a base hit, right? Am I upset because it kept going all the way up there? No, I'm not, because look how it got there. It came all the way up here. If I was waiting for that high, it came all the way up here, then it retraced all the way back down here before going back up to that high, right? Now let's think about this right here, right? You get into a trade, right? You get into a trade and it moves 72 points, right? 72 points. You're up. If you trade in the NQ, you up well over $1,000, right? Think about the mental part of it. 72 times 20. You're up $1,400 right now, right? And then price pulls back, right? Price pulls back. It pulls back and it comes 57 points back against you, right? It comes 57 points back against you. And now at this time, right, you're only up less than $300. What type of mental space are you in right now? Did you realistically stay in this trade as it pulled back against you 57 and like almost 58 points? Did you realistically stay in that trade that whole time just for it to go back up and then get that up there? I don't know many people who got the discipline to sit through that. I don't. So that's why I just went for my base hit right there at a low hanging fruit, right there at a PD array that's designed to keep it down, right? And why am I looking at that so heavily? Besides the fact that it's the first fair value gap that was created coming near, it's a BISI that's created in line with the high of that daily discount wick, right? So that's a quadrant level there, right in line with a SIBI that's created in the same spot, right? So if price is really heavy, that's a good spot for the algorithm to hit and turn around. Okay. Because when we come back over here, guess what price came back to, right? Ant-Man looked all the way over here, right there. See that SIBI right there? That SIBI right there. Once we came back over here and closed right there, we got a reclaimed SIBI there, right? Forget about all of this, right? You forget about all of that. Why? Because this is when price was coming down there, right? We made a low there. All of this here, time distortion over here. And when we traded down here during this macro time right here, right? We traded down here, made a reclaimed fair value gap, traded back up into that reclaimed fair value gap, and dropped it like it's hard. Right? Time and price. When time meets price, right? And let me show you something right here. This right here, this kind of stuff right here that I love seeing, right? This right here either gonna make me look like, hey, I got a crystal ball, or it's gonna make me look stupid. I'm gonna go with the crystal ball because this algorithm never fails. Macro window, right? Let's come here. Where we at? 10 o'clock, 10, 9:50. All right. Come over here. 10:10. What I tell you, never fails. Never fails. I wasn't worried in the least bit. Never fails. Never fails. I wasn't worried in the least bit about looking like a nincomdoof. Right. So this right here is a macro window right there. Right. This macro window right here is from 9:50 to 10:10. Uh-oh. 9:50 to 10:10. This macro window right here is from 10:50 to 11:10. All right. What do we talk about? Time and price, right? Time and price. So Tim, why over here, right? Why over here when we said price traded up here, you said that price was looking all the way back over here at that reclaimed fair value gap? I'm glad you asked that question, little Timmy Rogers. I'm glad you asked that question. Right? Because when did the elephant step in the pool? Here, boom, stepped in the pool. Got up here, boom, stepped in the pool. Right? This right here is a macro window. Right? What did it create right here on this quadrant level? A SIBI. Right? We went into this chop slop. We came to a specific time of day, right? Specific time of day. And we traded down, right? Let me draw the line just in case anybody can't see it. Line there, straight over there. What did we close back below? Right? We closed back below that SIBI right there. Right? We closed back below that SIBI right there. Created during a macro, created on a quadrant during a macro, closed back below it during a macro, traded back up into it, touched the quadrant, touched the SIBI, dropped it like it's hard. So that's why Ant-Man ain't paying attention to that inversion fair value gap. Ant-Man ain't paying attention to that SIBI. Ant-Man ain't paying attention to that SIBI. Ant-Man ain't looking at this bearish breaker. Ant-Man ain't looking at this bearish breaker. Ant-Man ain't looking at nothing but what's over here on the other side of all this time distortion. And then drop it like it's hard. I don't know about y'all, man, but I tend to believe that this stuff works. Because guess what? They ain't teach me this at Boyd Anderson High School. They didn't teach me this at Brown Community College. I learned this from a very person of my own character. Only difference is he's just a Caucasian 53-year-old man, and I'm a Black 53-year-old man. I get him. I understand him. And when he speaks these terms, I feel like Osmosis Jones. They just melt through my cerebral cortex. and I just get it. And it works. The stuff works better than anything I've ever seen in my life. So do yourself a favor. Be quiet. Block out the noise and put in the work. But don't tell nobody it's an algorithm because they'll ban you. Hey man. Yeah, I see price was pricing, right? All of the key levels used it, and we came down, traded back down to the lower quadrant of the daily discount wick, and then we closed above consequent encroachment of that daily discount wick. Right. So we have right now price came down, right, and took out the sell side where we said we saw our discount sensitivity, right? Had our discount sensitivity right there. Price traded up into this SIBI, right? Traded up into this balanced price range, failed to get to the lower quadrant. Then we came all the way down to the lower quadrant of the discount wick, right? And as of now, we are still respecting the discount wick, right? We're still respecting the discount wick. So in the midst of the sale program that we moved into to come back down to this discount, right? We came up, we extended the sale program here. So this is our overall sale program, right? We're still down here in a discount of our overall sale program, right? But we're still showing respect for discount PD raise. All right. Okay. Still showing respect for discount PD raise. Okay. So, and right, we didn't get back to the lower quadrant of the 40-day look back. Right. Remember that 40-day look back we was watching. Right. We also have our 20-day look back in there also. Here. All right. That's our 20-day look back there. So on the 20-day look back there, right, we're below the lower quadrant of the 20-day look back, but we're above the lower quadrant of the 40-day look back, right? And then just like anything else, right, just like anything else, you can always put anything into quads. Let's just use this one. Right. So come here, click there, go there, right? Closed above the halfway point in between those two price points there, right? Closed in. We're below the 20-day there, the 20-day lower quadrant, 40-day lower quadrant in between them, right? If you grade that area in between there, we close above like the midpoint / event horizon, right? Here we closed above the consequent encroachment of the discount wick. So in the midst of the sale program, we're still respecting bullish order flow, right? We're respecting bullish order flow or showing signatures of bullish order flow. Like we say, we don't want to try to pick a bottom because we are in a sale program, but based off where we've traded to, right? We're in a discount. All right. So when we traded back up to this right here, we came back to a premium. This is a premium PD array here, the latest expansion leg of our overall dealing range. We came back to the premium. This PD array's job is to push us down, right? We came down, failed to take the low, and then closed respecting that right there. So right now, this PD array still has not pushed us further down to extend this dealing range, all right? We touched the premium PD array, came down, touched the discount PD array. So what? We're in between the tail of two cities, a daily Sibby and a daily wick, right? Respect the Sibby, respect the wick. Which one won? Nobody won. Both of them have been respected, right? Both of them been respected, but we're still respecting the bullish order flow because this right here should support price if this area here is where the algorithm is stopping. Why? This is where our higher time frame PD arrays are, our monthly order block, our weekly, I think it was an order block, whatever it was, right? Bullish seasonality, all of that. Okay. But you're looking at how price close. These are daily PD rays. How does price close on daily candles in relation? In relation to these PD arrays, right? You mark out the stuff on your chart, understand why you market it on your chart, and then you wait for that time to expire. Did it respect it? Did it disrespect it? If it respected it, you keep on keeping on with that bias. If it disrespected it, you wait for a little bit more information and start to build a new thesis. Right? Know your invalidation points. Right? Know your invalidation points. That's all I got, man. Anybody got anything for me? Remember, yesterday was the last day that any live stream will be saved on my channel. The only thing that'll be saved on my channel from henceforth are pre-recorded videos. That's why they call it live stream. Got to be here to get it. Got to be here to get it.
What I missed yesterday? What happened? I've been out of class for a few days.
Old boy and them came through.
Oh, with the same old foolishness.
No, it wasn't a crank anchor.
Oh,
Anybody got anything for me? I wouldn't like that one bit busy. Oh no.
Appreciate you, Tim.
Ain't nothing, see Walt. Ain't nothing.
yeah, this was a good one today. Well, all of them be good. This was a good one.
I might be tired. I just got tired I don't know why I just got so tired. I felt like a real slow blink just now. you know, you feel like that real slow blank, you be like, man, I'm about to go to sleep. Hey man, that's all I got. I appreciate y'all for hanging out with me. If this is your first time tuning in to Tim's Tidbits, you probably not here no more because we've been on here about an hour. Right. If hopefully you got something out of this. If you did, I promise I'll try my best the next time to help you get something out of it. Tomorrow's Tuesday. I'm not sure if any like economic data is coming out because of the whole thing with the shutdown. I know they done signed everything, but I don't think people like back to work like that. Because when I looked at the economic calendar today, it was saying like delayed. Everything was saying either delayed or something like that. And I don't think anything is dropping, but we'll see. Again, if any economic data is supposed to be coming up, be mindful of those times, be careful around those times. And then if it don't drop, hey, it don't drop. Just keep, trading what you see, but don't take the chance that they're not going to drop it and be in a position and get your head ripped off. So just stay mindful of the times when the economic data is supposed to drop, especially the high impact information, and then, act accordingly afterwards. For those who don't know, I started recording a video Um, I started recording a video Friday because I was testing out. Well, I ain't gonna say testing out. I was giving Tradeify a shot, a prop firm called Tradeify. I saw like a bunch of other influencers talking about them, and I was like, hey, let me give them a shot. See if I like them. It's a few things about them that I liked, a few things about them that I didn't like, but it was cool enough for me to give them a shot. I eventually got two funded accounts with them, and I requested a payout Friday night, and I started recording a video to take. If anybody is interested in like maybe trying them, the video is going to be me walking through the payout process, like talk about like their main highlight rules, and then how to actually go in and request a payout. And I think it'd be beneficial to somebody because it's different than any other product. Like I've got payouts from my funded futures. I got payouts from Apex, and the process is slightly different with them, where like with other prop firms, you like take care of all of the KYC, like the know your contract or whatever. You take care of all that stuff up front, and with them, it's kind of like on the back end. So I was like slightly confused when I was going through the process, and I don't know if I edited out my confused looks or if I left it in there. I'm not sure, but I'm going to share that video, and hopefully it helps somebody who may be interested in using them. I don't have an affiliate link with them, but it's just a different prop firm that um I decided to give a shot, and we'll see if I like them. Right. Like I said, I got two funded accounts with them. One of them had met the eligibility to do a withdrawal Friday. The other one, I'm just a little bit off. I traded in it today, but it's still a little bit off from meeting a threshold before I can withdraw. Right. Just like a couple $100 off. Right. I probably could have pushed it today and pushed it over the limit, but once I took my trade, I was happy with what I made across three accounts, and I was like, I'm not gonna, ain't nothing guaranteed. I'm not gonna give money back. So, right, so um, yeah, and I think this gonna be like the only video that I do like that, because I'm not gonna, I ain't all about, like, one, I don't, y'all know I don't like putting people in my business, and two, I'm not, what I'm saying, trying to, be like prop firm, all that. That's like mad oversaturated. But I was just doing it specifically for the gang. Um, oh yeah, now you're seeing this right here when I just went and spent $18 on some body spray, and then they say all body care $5.95. What was this at earlier today when I was up there spending that $18 on my spray? Man. Is there any chance you would reconsider taking the replay down after the live? No, it's not. No, I've put a lot of thought into it, and yeah, that's what it is. Got to be here to get it. Got to be here to get it. Just think about it like this right here. If you're not here to get it today, you'll be here to get it tomorrow. If you're not here to get it tomorrow, you'll be here to get it the next day. All right? In the moment. And for those that's wondering why, because my platform is like I'm here for the interaction with people. If y'all ever notice, I always, you know what I'm saying, I have class participation, talking back and forth, you know what I'm saying, like asking questions, waiting on the answers, looking for the answers. If people don't want to participate, I'll just end the live because I'm here for the back and forth interaction, right? I'm here for the back and forth interaction. That's the whole gist of what I do and why I'm doing it. Right. And then, like I said, I understand people have stuff going on with their families. So I don't expect people to be here every day. Right. But at the end of the day, right, it's like it's unfair to me to put the time into it for a specific reason. And then those who make the sacrifice to be there, right? They know, you know what I'm saying? They taking time away from their family too, just to be here and tap in. And while others go do their thing with their family and then come back and watch it at their leisure. Right. But channel ain't going nowhere. And then I'm going, still post pre-recorded stuff that I feel like something that needs to stay. Right. Stuff that needs something that need to stay around, something that somebody really needs to be able to go back and watch. I'll make videos like that. Because what do I tell y'all all the time? I don't know when the last time I said something new. I don't know the last time I said something new. I ain't said nothing new on here in forever. The only thing that I've said new on here is suspension block. Cause Michael gave something a name. Other than that, I ain't said nothing new on here and forever. Which is not a bad thing. Because this is the same thing. Everything I'm saying, November the 17th, 2025, is the same stuff I learned from watching videos that Michael created in 2016, 2017. It's the same information. Right? The exact same information. 9 years later. No. 9 years later. And I appreciate you for being here in the cubicles, at church, hanging with the families on out. I appreciate you for being here through it all. Through the fire, through through it all. I just want to be with you. All right, man. If you're a diamond member, I'll see you in the morning for the pre-market analysis. All right. I'll do my best to try to get on at 9. All right. But depending on how traffic go taking Chris to school, it might be a little later than 9, but I'll do my best to try to pull up at 9. For everybody else, I'll see you tomorrow night at 6 for the price action recap. All right. But to the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Rogers Sr., aka Rania Grande. That's just Big Spot if you know hablo español. Y'all be safe out in these trading streets, man. Gone. Yeah.